Well, good morning, Bob.
Good morning, Bill.
This is F&C's Morning View, and today we're talking about a sensitive topic.
We've had a lot of calls from our clients and people who aren't our clients about how do you measure and how do you get on top of what are reasonable and customary fees for the AMCs and banks to charge their appraisers, or to have the appraisers charge the banks and then pass it on to the borrowers.
So we're talking about money.
Money.
So when we get down to it and we talk about money, appraisers have to be paid reasonable and customary fees, as opposed to unreasonable.
Well, I think the Protection Bureau for the consumers is worried that the banks or other lenders or vendor management companies may be putting in exorbitant fees for the appraisal process and then passing that on to the borrowers. And what they're trying to do is to say, okay, there may not be an accurately specific right appraisal fee, but in general, they need to be reasonable and customary.
Well, let's talk about that. Actually, there's another angle to this, and that involves the lender trying to make money, or the appraisal management company trying to make money by getting the lowest priced provider to provide the service and make the biggest spread, and not charge the applicant that fee, but charge the applicant a much higher fee and make money on the transaction.
Well, yeah, there's several aspects of this. One is protecting the consumer, but the other thing is, if you're going to get a quality appraisal, competent, quality, then you've got to be able to be willing to pay the appraiser a reasonable fee for their work,
Well, that's been a big issue. The appraisal community has alleged for a long time that they have been getting the short end of the straw, that the appraisal management company has been charging, as an example, $400 and paying the appraiser half of that, or $200.
Right, and so many of the more experienced appraisers who have the expertise to do a really good job might not be willing to take that $200 job, and therefore the appraiser management company gets less quality appraisers.
That's the allegation, of course.
Exactly.
Now, that may not be true. Let's back up a second and talk about how we measure reasonable and customary. Is it an average?
Well, that's the issue, right? I mean, who knows what's reasonable and customary? The legislation certainly didn't define it.
They did not.
And so what people are looking at is trying to get some distribution of those fees and again, it's going to be dependent upon property, the location of that property, the value of that property. Obviously, $1 million property is going to take a lot more work and a lot more expense than a $20,000 tract house.
Moreover, if you're in a rural area versus an urban or suburban area,
Exactly.
it's going to be much more difficult. Your comps are going to be further apart. And that brings into question the actual data that the appraiser has to sift through to find real comparables. It's a longer search process.
Right, and in today's market, when there's a lot of depressed prices due to foreclosures, and then there's the issue of markets being depressed and not having a lot of transactions, not a lot of comps, requires the appraiser to do a lot more work. So what people are doing is they're saying, okay, let's look at this distribution of prices that lenders are paying or vendor management companies are paying for appraisals, and let's look at it by location and by the product type, the type of appraisal being done, the property value, all of those types of things, location in terms of rural versus urban. And then let's say maybe pick some sort of a central region, say 20% to 80% percentile region, and said anything in that is probably reasonable and customary.
I'd a whole lot rather be at the 80th percentile than 20th percentile.
Well, it depends on which side of the deal
Exactly.
you
If I'm paying receiving, but if I'm receiving, I'd rather be on the 80th percentile. If I'm paying, I'd rather be at 20th.
Exactly, yeah.
And so let's talk about that spread and how we look at that spread. And so we know if it conforms to a normal distribution within plus or minus 2 standard deviations around that average, whatever you want to call it, mean, median, or mode. We're talking about the average today. But in terms of the mean, plus or minus 2 standard deviations, we're looking at about 95% of the observations, if it's a normal distribution.
And it's not. It's actually it's a log normal distribution.
Okay, all right. Well, let's get particular here. Okay, all right. So
Yeah, it's an issue, but even so, let's say that we.
Did you make that up?
I did not make that up. I know exactly.
You're not a log burner. Go ahead. You made it up.
But we've got the issue is, let's say that you're a vendor management company. How are you going to know what that distribution is? Okay, you know what you pay.
Right.
But I don't think you can particularly pick up your phone and call all of your competitors and say, how much are you paying?
Because they don't have, but one vendor management company, or one bank for that matter, does not have enough data.
Exactly. And so how do they know? Well, some of our clients have come to us and we've put together some tables, but it doesn't cover the universe of all the different fees that are out there. We don't have, F&C doesn't have much data on vendor management company to appraiser. We have good information on lender to vendor management company and lender to
the
individual appraiser.
mom and pop
Yeah,
appraiser, right.
But we don't do vendor management company to appraiser, and so there's this lack of data out there for people to even analyze. So it's a big issue, and people are starting to get worried. I had 2 different calls last week from companies that are saying, if we're audited, we're just bare right now. We don't have any data to help us.
Well, it's a problem that really is solved by industry participants sharing data with each other or through a third party. It probably has to be through a third party,
Right.
Because they're not going to share directly with each other.
They're not going to share directly with each other, and there's another
I'm going to
big
make up a
issue.
word. They want it anonymatized.
There you go. That's a good word.
That's like your log normal. I know that's a real distribution.
no,
I know it's a real distribution, but go ahead.
But I mean, one of the problems is that when you start sharing price data, there are certain government agencies that get real nervous about price collusion, right?
Like the Federal Trade Commission.
Exactly, and so you've got to be real careful about that. And so one of the things that we've done in terms of aggregating this information is that we require that it all be, what was that word again?
Anonymatized.
Anonymatized,
Okay.
and that we have to have a certain number in any given area for any given type of appraisal. We have to have a certain number of vendors included in that. I think the minimum is 5. And no single one can have more than 25% of the market. And we delay everything by 3 months so that there's no current specific information there.
And so it's also disguised by a client, and,
Right.
and so
It's impossible to figure out who's doing what.
I
from
didn't
that.
make up that word, anonymatized.
I think,
Sort of like
well, we could put that in the
in the dictionary, lexicon.
Oxford English
Oh,
Dictionary. I think
Exactly.
it-
All right. So
Source, Bill Rayburn.
the key here, though, is to have enough data, and let's talk about how much data we really need by market. Probably about 10 data points at least at a bare
Well,
number.
but remember, you've got to have 5 different vendors.
Right.
Okay, and no single one can be more than 25%. So typically we're looking at, we really can't report typically until we have at least 30. So, and
That's a magic statistical observation number. Anyway.
absolutely, yeah, it's related to log normal distribution.
And it has to be anonymatized.
Exactly.
Well, it's all about finding reasonable customary fees because it is required by Dodd-Frank, and this is going to be an issue as these regulations are implemented over time.
Right, and it's a problem that the government created the regulation, but they did not provide a way to solve it. And so I guess it's up to us to solve that for them.
With a log normal, anonymatized. This is FNC Morning View. I'm Bill Rayburn with Bob Dorsey. You all have a fantastic day.